What is going on, my friends, and welcome back to the Crypto Catch Up. Of course, your number one place to catch up on crypto. Well, we're back home, back in the studio, and I'm back bringing you some full-blown catch-ups because, of course, this crypto market is going absolutely nuts, and I want to keep you as informed as possible. And so with that said, guys, today we're going to be taking a look at some news that we got from Blackrock, some news that we got from Japan, what's happening from a technical perspective, what's happening from a fundamental perspective. We are going to be doing a full catch-up on what's going on with crypto right now to kind of lay the foundation for the week and start this thing off right. And so, of course, if you guys do enjoy and do find the content valuable, don't forget this is a brand new channel. So if you could subscribe, that would be absolutely amazing. But with that in mind, let's get straight into it, guys. Don't forget, if you do want to trade some Bitcoin yourself on up to 100x leverage, you can use the Margex link down in the description below. Guys, you don't need to KYC, meaning you don't need to give them any of your personal information. You just sign up, you start trading, you're going to get up to $10,000 in bonuses and rewards. And the reason why I do all of my trading on Margex is just simply because there's so many different forms of collateral. It makes my life super easy. Now, diving into the news, baby. Diving into the news, what we can see is that we are starting to get some developments out in Japan. This comes in and says Japan to cut Bitcoin and crypto taxes from 55% to 20% if the Democratic Party of the People wins the election. Now, sure, this is kind of a stipulation, right? It's not just saying right now Japan is doing this, but it does, one, paint a picture that I want you to see in a second, but two, it also goes to show that there is a card on the table right now that things in Japan may get even more beneficial for the world of crypto, even more appealing to the world of crypto, and especially as we do see certain places like Italy, for example, that are still trying to hammer down on crypto for some reason. The more and more places like this that can open up the doors and make the legislation and regulations as lenient, not as lenient, right, but as clear and as lenient to some degree for crypto investors as possible, the better. Now, another picture that I want to paint with this type of news is news that we're also seeing here in the US. And what that's saying is that we're now starting to see these different political parties, whether it's in Japan, whether it's in Hong Kong, whether it's in the US, whether it's even in places like Venezuela, right? We're starting to see them use the cryptocurrency world as leverage to some degree, right? A lot of these different political parties are starting to recognize that if they can appeal to the world of crypto, that they're gonna do better, and it just gives more and more legitimacy to us as a community because they're now starting to recognize that we're important, that we matter, and they're gonna go out of their way to appeal to us, and I love that. Now, politicians are liars. I don't mean to offend you if you are a politician, but most politicians have a habit of lying. Check the stats. And so because of that, does this mean that they're going to follow through with these things? You can never really know, but it's a step in the right direction. So because of that, I always like seeing news like this. Now, what's some other news that we got? We just got news that Blackrock's Bitcoin ETF breaks a record, becoming the third largest ETF in year-to-date flows, making it now officially the fastest growing ETF in history. What you can see here is that IBIT is currently sat around 22. Dude, that's just it's so insane to look at this. $22 billion of inflows in just 1 year. Absolutely nuts. Only followed behind IW and VOO. Now, mind you, VOO, sure, it's about triple, right? A little over triple the size of IBIT right now. But when you think about the fact that VOO is what many people just consider to be the stock market, right? It's what many people consider to be the ETF that you invest into if you want diversification and you want something beginner friendly that you can just start with, right? The size, it's just the size. Absolutely nuts. That is already making records like this. Nuts. Absolutely nuts. Okay. Now, you can start to see this starting to transpire in other places, right? You look at Bitcoin ETFs as a total, okay, combined. What can we see here? Gold versus Bitcoin ETF inflows by year. Year one, look at this, 20 billion up here. Gold was sat there right around 1.81 to 2 billion roughly. Now, obviously, guys, different time, different resource. I don't particularly even gauge these to be the same. It's so common for people to make comparisons like this. For example, think about how much of a grip on the social media side and just the internet that Bitcoin has versus what gold had at the time. So you got to think, when gold ETFs came out, realistically, the only people who were going to learn about them were people who either invested in gold or whenever their investment, the investment firm that they worked with, right, or their investment manager or institutions, whatever, told them about it. It's just not the same, but it is important to see because it just goes to show you the scale of things. I've always said I don't like the comparisons of gold to Bitcoin. I think gold is its own thing, right? But I do think that Bitcoin is really in a league of its own. Not saying it's substantially better. I just think it's different, and I think that the approach is different. The value is different. I just see it differently, but this is interesting to see. Now, one thing that I do like to see, okay, one thing that I do pay very close attention to is the adoption curve of Bitcoin versus the internet. I think that this is one of the most comparable things, quite simply because of the approach of getting its name out there. Now, the only difference that I have is that obviously it is cool to see, right? Just if anything, it's cool to see that Bitcoin has still been outpacing the internet in its first few years. And I would say eventually there will become a point in time in which it's hard to compare the two, because what you have to understand is getting access to the internet to some degree was substantially cheaper in 2004 than getting into Bitcoin right now. Now, sure, anyone can just buy Bitcoin. You can buy $4 worth, $5 worth, $6 worth, but you have to think about the comparison. People back then could almost for free, right? There were some libraries, some schools that were giving access to free, and obviously some people had to pay for it. So I understand that there's a little bit of a pay barrier, but not as big. They could pay a little bit or spend no money and get access to the internet, and they used it. Like, they actually needed it. It was going to give them supreme benefit in their life. Whereas with Bitcoin, if you buy $4 worth of Bitcoin, sure, you invested. Is it going to give you supreme benefit, though? No, not really. So although it is cool to see, I do think there will become a point in time in which this internet curve is going to outrun us, and I do think that's fine. I don't think it's a big deal. But up until this point, it is pretty damn cool to see that Bitcoin's still outpacing the growth of the internet curve. So really cool. Now, a lot of this volume that we've been seeing, starting to come in for the ETFs and leading to this adoption and all these things, has really just come from the ETFs this year. What we can see, especially from last week, is that, man, things have gotten quite bullish. Digital asset inflows just last week hit a $2.2 billion mark, the largest since July, driven by optimism over a potential Republican U.S. election win. What we can see here is that iShares, boy, did they absolutely smash it. Blackrock smashing it. $1.19 million, or sorry, no, not million, $1 billion worth of inflows. Grayscale following up with 68 million of their own, which is interesting, of course. We've seen a lot of outflows for Grayscale over the course of the last couple, the last 9 or 10 months roughly. And it's interesting to start to see them even during, times like this where things do get bullish, they are starting to kind of lean into bullish direction. It is interesting, especially because their month to date is negative 99, right? So they recouped a lot of that. If that would have been probably somewhere around a negative 150 or so. So they recouped a lot of the outbounds that they saw this month just in the last week. So it's interesting, right? ARC21 coming in 306, 21 in CoinShares, fumbling the bag still, not looking too good here. Their fees just aren't very good. They're not as popular. They're not as trusted. So people are just going to other places. Bitwise 150 million, ProShares 74 million, and other coming in at 124 million. We're starting to see some of those smaller ETF collections doing decently well as well. And so because of that, overall, an absolutely amazing week. Insane inflows by BlackRock. Absolutely nuts. $1.1 billion. Absolutely crazy. Leading the charge very well. Now, the way that was broken down, obviously majority of that was into Bitcoin, 2.1 billion of it, but 57 million into Ethereum was cool. We saw an outflow on multi-asset and Binance, but Solana did hold a little bit of decent weight, $2.4 million worth of inflows last week. Not terrible, right? Putting year-to-date flows at 58 million, especially after the year that Solana's had, which quite frankly hasn't been the best year, right? Obviously, point A to point B was great, but since then, if you just exclude this 2 weeks or about 8 weeks, that 6 weeks, whatever, that Solana ran, it's just not really had the best year. So seeing a lot of people sticking around and still here, love to see it, but we'll talk more about that in this standalone video, and then a little bit of inflows into short Bitcoin, but I'm sure that is not going well for them. So overall, from a news perspective, not a ton of news since the last videos that we made, but it is good to see that we are seeing the ETFs really still gauging a lot of momentum, picking up some traction, and obviously putting in a record-breaking week. This is one of the best weeks this year. Putting freaking iBit, dude, third place, so close to VLO. It's just it's wild. It's truly just wild. It's almost hard to even wrap my mind around, quite frankly. So, you just love to see it. You really just love to see it. Now, looking at Bitcoin in the market from a back-end perspective, let's get an idea of what the fundamentals are looking like, because I do like to kind of base my short and midterm thesis off of this. Now, what we can see is that we have started to lean back in towards the realm of greed, and we're moving through it very quickly. Just about a week and a half ago to 2 weeks ago, we saw Bitcoin in the fear zone, and then it immediately shoots into the neutral zone, then it immediately shoots into the greed zone. And so when we have these moments in which we're moving so quickly through these sentiments, it just warns me a little bit like, hey, people are super emotional right now. This is around the highest levels that Bitcoin's been this year, just in terms of overall greed. Obviously, it's been higher, but in general, or it was higher at the top of the last bull market. But, this year, this is around the highest that it gets usually. And so whenever we're sitting like this, it doesn't particularly mean that we can't continue higher. Like, what I want you to understand is we were sitting in greed throughout this entire run to the upside here. It just warns me that at any given point, this market could just start to pull back and start liquidating a lot of these people who are starting to get super emotional and super high on leverage. Now, speaking of emotions and kind of speaking about how people are reacting to it, one thing that I have been paying very close attention to is a liquidation heat model 2. Heat map model 2. Okay, now I usually use heat map model 1, but I have been liking this one a little bit more, especially here on CoinGlass, because it's a lot smoother, and it's starting to give me a little bit more of a clear visual representation of where liquidations are at right now. And what I will go ahead and say is that we are still in a spot in which I do believe that there are still more valid liquidations that will happen if this market moves upwards, but we are seeing them building towards the downside. Like, this is getting a little bit more dense than it was prior. You guys know that I have a genuine true belief that this market will move in the direction in which the most liquidations will happen, quite frankly, because the lizard people, the people who manipulate this market, they're trying to take your crypto from you. They see what's happening. They see the lack of supply. They see the opening of regulations. They see the control. Politicians see it now as well. And so as a result of that, they want your crypto. The easiest way for them to get it is to liquidate you and take it. And so because of that, they're going to try to liquidate you. And so in moments in which I see liquidation building in either direction, I'm always aware that you could go in that direction. Now, what I will say, and what is a good sign, is that at this exact moment, even though we have been seeing this market pushing upwards and people are getting consistently more and more greedy, we are still seeing more liquidations that will happen to the upside than the downside from the grand scheme of things. You can see this massive accumulation of liquidations around 72,500 that goes all the way up until freaking like $86,000, $87,000. And so I do truly believe that we can push up into that. And you can even see quite recently, right? We started to come up and start to hit these liquidation levels that we had already started building. And I do think that that very well can continue. Now, reality says that in the short term, it might not be so easy, right? You look at your 7 days, look at all these freaking liquidations that'll happen if we fall to 64K. You look at your 30-day, look at all these liquidations that happen if we fall even as low as 62,000. So sure, it might not be immediate. And we really might see this market get a little pullback prior to being able to make that move to the upside. But at the end of the day, from a macro perspective, we are still seeing the accumulation of dense liquidations above us. And I do think that is the direction in general that we will go. Now, again, I am being cautious and I am aware of the fact that a pullback may happen. And especially guys, when we start to see stuff like this. So one thing that I've been paying attention to is open interest and volume. And when I see things like this, in which let's just go ahead and let me just zoom in, okay? What you can see, the blue line is open interest. And you can see that open interest itself has nearly surpassed its yearly high, where we're at for the year. And if we do put that into a macro perspective of where we've been all time, that means that we're probably about to look for a new all-time high in open interest. Now, this isn't shocking, right? We have seen developments recently, the SEC approving more options trading options and more things like that. But quite frankly, the more leverage, the more interest that hits this market, the more volatile that it will get, and the more likely that liquidations on both sides will happen. And so because of that, my primary thing that I'm saying here is that my long-term thesis is that Bitcoin will continue higher, but because this market is greedy, because liquidations are building to the downside, because of all these things, I still do remain cautious. I don't just go in and go 100x leverage. I don't think 100x leverage right now is a good idea. I'm sitting at 5 to 7x. I'm comfortable there. I know where my liquidations are there. And I think that it puts me in a spot to where I can still benefit from this market without risking too much. So my general thesis is that I do believe we will continue higher over time, but getting there could be ugly. And it may be way uglier than people think it is, especially considering the amount of greed in the market. Now, moving that into what's happening from a technical perspective, we can kind of see what's happening here. Bitcoin, of course, has been in this descending channel since March/February of this year. And I've told you all to watch very closely. We need to see the breakout here. And all I'm going to go over from a technical perspective today is the fact that Bitcoin's price is trying to break this resistance. Quite frankly, nothing matters right now except for does Bitcoin or does Bitcoin not break this resistance level? Does Bitcoin get above $70,000? Realistically, that's the level you're looking for. Does it get above 70K and hold above 70K, finally giving us a breakout of a descending channel and accumulation period that we've been in for nearly 7 months? Or does it get rejected off of it again, like it had back here, here, and here, and risk, possibly falling as low as the mid to low $50,000 range. This is still on the table. Although you may not want to hear it, there is a chance in this scenario in which we see Bitcoin come back towards 57,000 and then try to look for a breakout to the upside. And so knowing that there is so much on the line depending on if Bitcoin breaks this key level or not, we're not doing technical analysis today. All I'm telling you is to watch what happens here and don't do anything. It's not financial advice. Obviously, you do what you want. I don't care. But at the end of the day, I'm not doing anything, because if I do, I'm just taking a 50-50 risk, because this market's either going to clear through a massive point or get rejected off a massive point, both of which will have huge implications, and there's no good way of knowing what's going to happen here, okay? And so because of that, I'm watching this very closely, and I'm just going to let you guys know over the next coming days, of course, how this does play out. Now, guys, don't forget, if you do want to trade some Bitcoin as this thing does either break out or get rejected, go check out that Margex link. It's available for you there. You can trade on up to 100x leverage. I don't recommend it. I think 5x, 6x, 7x is a good spot right now, but do as you please. But of course, I hope you guys did enjoy today's catch up. The whole purpose was to get you caught up on the news, the fundamentals, and the technicals, and so I hope I was able to do that for you. The primary focus of this channel, and the reason I started it just 2 months ago, was so that every day I could come here and just let you guys know what's happening from a macro perspective, from a grand scheme of things, and I hope I'm doing a good job at that. If so, please let me know down in the comments below. You can also just let me know easily by liking this video or subscribing to the channel if you're not new. Of course, or if you are new, sorry. I know some of you guys, like 40% who watch my videos, aren't subscribed, so if you could, that'd be amazing. I appreciate you so much, and I can't wait to catch up with you all next time. Peace out, everybody.